Hello viewers, I hope you enjoy the contents of my videos. The theme of today's video is Effect of Variable Self-Employment Income on CRB Admissibility. Let us explore this topic. In fact, this is my third video on the topic of CRB. In the first two videos, I explained key differences between the CERB and CRB and the concept of average weekly income under CRB. The theme of this video is, as I just stated, effect of variable self-employment income on CRB admissibility. Let me quickly recap the fundamental fact about CRB for those viewers who are watching my videos for the first time. As most of you know, that the Canada Recovery Benefit or CRB has introduced the concept of average weekly income to determine if the applicant qualifies for CRB benefit for each 2-week payment period. This average weekly income must be calculated for each eligibility period comprising 2 weeks and then compared with either your 2019 or 2020 or last 12 months average weekly income earned. If the average weekly income for the relevant eligibility period is less than 50% of the average weekly income earned in either 2019 or 2020 or last 12 months, then you qualify for CRB. If your average weekly income is 50% or more, then you do not qualify for CRB. Now, the important question that may come into the mind is that if, as a self-employed person, your weekly income is variable, as will be the case with many businesses, then how do you calculate average weekly income to determine your eligibility for each 2-week period of CRB application? As it happens with most businesses, the pattern of business revenues and expenses is never constant on a weekly basis. Besides, there are certain business expenses that may be calculated by applying tax rules rather than accounting conventions. The examples of such business expenses may include 1. Capital Cost Allowance or CCA. The Capital Cost Allowance or CCA is an admissible business expense under the Canadian tax law. This expense is based on the application of accruals principles of accounting that allows matching of business income and expenses of the same tax period. However, the capital cost allowance that may affect the calculation of net business income is calculated at the time of filing your income taxes. So if you are running your business as a sole trader or a partnership business, you need to be more careful when applying for each eligibility period of CRB to ensure that accurate amount of CCA is included while determining your average weekly income for the eligibility period. This may be a daunting task for many people. Second category of relevant expense that may cause problem is business use of personal vehicle. Business use of personal vehicle is another business expense for a sole trader and a partnership business that may affect calculation of average weekly income for each eligibility period of CRB. This expense is calculated based on tax rules, usually at the time of filing personal income tax return, by prorating variable and fixed vehicle expenses as per tax law. Examples of variable expenses may include gas and insurance expenses, maintenance cost, while fixed expenses may include annual license and plate fee. Third category of important business expense that may be a point of concern is home business expenses. As we know that some businesses are operated from home and part of the home expenses like rent, utility, internet expenses may be apportioned to the business based on tax rules and conventions that are applied at the time of filing your taxes. So the accurate calculation of these business expenses may also cause problems for many CRB applicants. In the light of these facts, it is evident that calculating average weekly income on a fortnightly basis may be a problematic task for many self-employed persons, that is, sole traders and partnership businesses, whose business revenues and expenses are variable on a weekly basis. The flip side of this fact is that even the CRA may get itself indulged into long and expensive audit processes if it starts verifying large number of CRB applicants' cases at the time of assessing their personal income tax returns for year 2020 and 2021. I hope you enjoyed this video. For further updates, you may like to subscribe to my channel and press the bell icon for notification alerts.